This National Professional Anglers Association video presentation is brought to you by Missouri Secrets Tackle and 241 Inc. Productions.
Good morning, everybody. Thank you for coming to our session this morning, Passion to Profession in the Eyes of the IRS. We're with Froehling Anderson, which is a mid-sized full-service CPA firm out of Minneapolis, Minnesota. And we help our clients with tax compliance and consulting, any accounting and assurance requirements they may have, bookkeeping, and business consulting. We work with a wide variety of clients, ranging from manufacturing, distribution, professional services, contractors, construction, real estate, and nonprofits. We also, over the years, have developed a niche with professional athletes. And the more and more we are working with the professional anglers, there is a lot of similarities between the two, that professional athlete and that professional angler. I'm Gail Thompson. I'm an accounting manager at Froehling Anderson, and I have over 25 years of experience helping clients with their financial reporting, accounting, bookkeeping, various consulting projects. And that's not enough, so my husband and I own our own trucking company where I deal with the tax compliance for the trucking industry and day-to-day bookkeeping. So when I'm not working, I'm at the lake. I grew up fishing with my dad and my 6 brothers, and I still love going to the lake, fishing with the family, and we compete every season for the largest fish.
My name is Joe Rubenstein. I'm a tax manager at Froehling Anderson. I have 11 years experience. I'm a member of the tax controversy team, meaning I'm the guy that deals with the love letters that the IRS and the state sends for my clients. I also work a lot with the professional athletes, a lot of NFL, NBA, NHL, and PGA. And I'm an outdoorsman. I'm a hunter and fisherman just like you guys.
So with that, I imagine a lot of you, or at least some of you here today, are a lot like my son Danny. He's up here, really proud of his catch of the day with his dad and his brother Dana. He began fishing at a very young age. And you know, he always caught those huge sunfish and crappies that everybody just loves to clean. Well, thankfully, over the years, his fish got a little bigger, and so did his passion for the sport. So he and a buddy decided to start fishing tournaments, and they actually won a little bit of cash. So as a CPA, I felt I had to at least advise him or remind him that he's going to have to pay taxes on that money at the end of the year. So keep those receipts, log your expenses, so you know he's got some deductions. I believe he said something like, "Whatever, Mom." So I kept quiet. It was the last tournament of the season. I get a phone call. He is super, super excited. "Hey, Mom, guess what? We took first place. We just won a boat. What do I have to do now?" So that's why Joe and I are here today, to talk to you guys about when your fishing is no longer just a hobby. You want to take it to the next level. You want to become a professional angler. And how can you do that? And more importantly, how can you do that in the eyes of the IRS? We're going to touch on 4 topics: hobby versus business, the importance of good record keeping, tax planning to maximize your savings, and multi-state issues that you might run into. There will be time for questions at the end, so please write them down as you go. We've provided a sheet for you to write down on. Also, you might want to write down these three takeaways. We have 3 key takeaways from our presentation today. Keep good records. The second one, know your tax filing requirements in the state that you live in, as well as the states that you're fishing in. And finally, everyone's situation is different. The right answer for one angler may not be the right answer for you or another angler.
So hobby versus business has been a hot topic in the eyes of the IRS for years, and mainly because if you are able to treat your hobby as a business, you can take those deductions, and if you have a loss, you can offset those losses against other income that you may have. But if you're deemed it a hobby, your expenses are limited to the amount of income that you have, and those expenses are taken as itemized deductions on your individual tax return, and they're subject to certain limitations, which you may not get a dollar-for-dollar deduction against that income. So what is a hobby? Is it race car driving? Is it poker playing? Sure. So what is a hobby? Is it race car driving? Is it a horse farm? Is it poker? Is it fishing? Well, it's all of these things, but they can be businesses too. And really, it's your burden to prove to the IRS that you are a business. So most of you know the income 3 out of the last 5 years rule, I would assume. Basically, if you have income 3 out of the last 5 years, you're exempt from the hobby loss rules, and you're able to offset that income. If you have losses in 2 out of the last 5 years, you'd be able to take those losses and offset your other income that you may have. But what if you have losses more out of, more than 3 out of the last 5 years? You want to be able to offset those losses against the other income that you might have. So that's not the only criteria that the IRS uses. They have other factors that they factor in. And the next few slides are what we're going to go through as to things that you can do to make your business look like a business. And really the overall is make sure you're conducting your fishing activities in a business-like manner. And by doing that, it's, have an annual business plan. Project out in the future. What are your goals for the next year? And look at it on an annual basis. How many tournaments do you plan on fishing in? Are you going to be doing a guide service that year? What are your goals? How are you going to drive in customers? Keep your contracts with your sponsors. If you have endorsement deals or sponsorship deals, keep those. If the IRS ever comes looking at you, and they're going to want to see these contracts to see how you're earning that income. And if you have those, you can legitimately say, I have a business and they're sponsoring me. This is why I'm doing this. Have a business license. This isn't so much for fishing and tournaments, but if you're providing guide services in a local area, you might have to check with your city government and make sure that you have the right licenses to perform a business activity in that area. Keep yearly financial statements. Use Quicken, use QuickBooks to summarize your activity for the year. If the IRS ever comes and looks at you and you hand in your financial data on the back of a napkin, they're not going to think that you're a legitimate business. But if you hand them a set of financial statements, they're actually going to see and think that you're trying to be a business. Seek out legal advice and financial expert advice. Talk to your attorneys, talk to your CPAs. Make sure that you're doing things in the right manner. Attend trainings, educational seminars, conferences just like these. Talk to your peers. Figure out what are the trends in the industry. What is everybody else doing with their activities to make them look like a business? And if you're doing things differently, why are you doing those things differently? And work on your business on a regular basis. If it's fishing season, you should be out there fishing. Go back to your annual plan. If there's a tournament that you said, I'm going to this tournament because whatever reason, make sure that you're there. Be proactive with it. On top of all those things, another thing that we can do is formalize your business. And by that, I mean, set up an entity structure. Most of you might be a sole proprietorship right now. There's also limited liability companies and corporations. And we're going to go through a little of these on each one. A sole proprietorship, that's the most basic form. A lot of you are this right now. There's no separate tax return filing. It's filed right on your individual tax return. It doesn't provide any personal asset protection, and we're going to get into that a little bit later. And it uses your Social Security number for tax reporting. So if you're participating in a tournament and you have to fill out that form, you're using your Social Security number. So when you give that, you're most likely giving it to someone you've never met before. You don't know what they're going to do with it. They could take it and steal your identity. So it's just one of those things that a sole proprietorship, it's a bad thing to have. A limited liability company, that's really the next step up. It still has the ease of the tax filing. It goes right on your 1040. But you have the ability to create a separate federal ID number for that business. And what that does, instead of giving your social security number to that stranger, you're giving the business ID number. So it adds that identity theft protection. And then you're able to protect against your personal assets, and I got an example that we'll go through in a couple slides. A corporation, that's the next level up. That's, there's a separate tax return that's required to be filed, so it's a little bit more complicated than an LLC. It does allow for the separate federal ID number for the business activity, and it does protect against your personal assets. So protection on your personal assets. So one of your fellow anglers that we talked with last summer was participating in a Pro-Am tournament, and they're driving out to their spot, and the amateur happened to get hurt because it was really wavy and rough waters. She hurt her neck, and she ended up suing the pro for a very large sum of money. And thankfully, he had enough insurance to kind of cover that. But if he didn't have the insurance, or if he didn't have an LLC set up, that's when you get into the personal asset protection, because she could have come after his home, anything that's personal, above and beyond just, your business assets. So, consider setting up an entity just for that extra level of protection. And talk to your CPA, talk to your attorney, and make sure, figure out what's the best entity to set up for you.
So I mentioned it earlier, but I am going to say it again. You got to keep good records. Why? Because hearing it from me today is free advice. Hearing it later from the IRS agent, it more than likely is going to be in the form of a tax bill. So keeping good records is not fun. It's tedious. It's very time consuming. One of your fellow anglers, actually described it as horribly painful. Now, I probably wouldn't go that far, but I'd rather be fishing too. But the fact is, without receipts and without good record keeping, the IRS can and they will disallow your deductions, and it could be very costly. So tip number 1, how many of you here today, raise your hands, have a separate checking account and a separate credit card set up? Yeah, almost all of you. That's really good. That's the first step. So for this account, you should always deposit any monies that you earn, winnings that you get from a tournament, payments you get from your sponsorships, any other income you generate from your fishing business gets deposited into this checking account. Then all the expenses pertaining to your fishing activities also get paid from this account, as far as your bills and all that. I highly recommend you don't run any personal transactions through this account. Yeah.
So if you don't have any winnings but you have expenses, how do you not put personal money in there to pay your expenses?
But that would be a personal input of money, so you would record that in this account, in your accounting, right, as a deposit.
Would that technically be a loan to the business?
Yes. Yes. So, but there's benefits to having separate accounts. The IRS looks at it as good business practice. It can actually help that tedious bookkeeping be a little easier because you're not trying to pick and choose transactions out of your personal expenses. It's all just in that one account. And it can prevent mistakes. So let me give you an example. Let's say you purchased your spouse's or significant other's Christmas gift this past December from Cabela's. And you paid for this with your company credit card or checking account. Now, normally, the only thing you buy at Cabela's is fishing supplies, gear, equipment, that kind of stuff. So when you do your bookkeeping for December, it'd be really easy just to see Cabela's, record it as a business expense, when really it is a personal expense. And it's going to be hard to explain to the IRS that you need this grill on your boat, right? Yeah, you can argue that. Good luck. Yeah. Okay, so tip number 2, keep your receipts. Now, notice I did not say credit card statements. The IRS does not consider a credit card statement by itself as a legitimate receipt. It doesn't have the details. Your credit card statement, if you recall, it's just one line item. Cabela's, $5,000, right? The receipt is going to show every item that you purchased, totaling that $5,000. And they want to know if you didn't stick a personal item in there, right? They want to see that detail. So with a show of hands again, how many of you keep your receipts? Quite a few of you. That's really good. Those of you that don't, I'm going to tell you a story that might make you start keeping your receipts. And those of you that do, I actually had a guy in the previous session say, well, kinda. So if there's some kindas out there, this might help you keep them all the time. We had a client that used his credit card for his business all the time. And he got chosen for an IRS audit. And they're very nice. They send you this long list of items that you got to provide for these audits, which they did, everything except for one item. The detailed receipts to support $150,000 of deductions, legitimate business deductions for their business they charged on a credit card throughout the year. In their QuickBooks, they had actually detailed out the specific items of what they purchased to support this $150,000. The IRS came back and said, too bad, we don't care, we want those receipts. And they got a bill for $60,000. That's the $150,000 times their 40% tax rate. Froehling Anderson, we were able to help them appeal it and got that liability reduced considerably. But the fact is, if they would have just thrown their receipts in a shoebox or a paper bag, seal it up at the end of the year, mark it what year it is, pulled that bag out, handed it to the IRS, more than likely, it wouldn't have cost them a penny. So tip number 3, you need to document the details. Now this is anything that relates to your fishing business. If it's a tournament, an event, a conference like this, the boat shows coming up, the sportsman shows, guide trips, remember the who, what, why, where, how. Who are you with? What's it for? Why are you going? Where is it held? How many days, how many hours was the event? On top of that, you got to record your miles. How many miles did you travel to and from? And let's say you go into a tournament, you hit a detour. It's an extra 100 miles. Document that to support that you had extra mileage. Was there an entrance fee? I know a lot of times you guys get in free to some events, but if you don't, document that fee. And then parking. That's one we often take cash out of our pocket, pay it, forget about it. Log that down. That's a deduction a lot of people miss, and we don't want to pay the government anything more than we have to. As far as fuel, it's always a good idea to keep separate what you're buying, the boat fuel that you purchase, and the fuel that you're purchasing for your truck or your vehicle. And then for tournaments, it doesn't matter if you take first or last place. Document what place that you took. It gives proof that you're there. And a prize. Did you win any money? Or did you get a boat or whatever it might be? For repairs, oftentimes on the repair ticket, it doesn't give enough details. You should document what it was for, whether it was the trolling motor or your depth finder, your big motor, your truck, whatever it might be. And that goes for equipment as well. You might be purchasing all the green lures off the shelf for one specific tournament because that's the only thing the fish bite on at that particular lake, right? Document that. Or if it's a guide trip, you're going to use these 10 poles that you bought for a guide trip instead of you personally on your tournament, right? So a good rule of thumb is the more documentation, the better. Meals and lodging is actually a little bit different. You have 2 options. You can track the actual expenses you incur, keep those receipts, or you can take a per diem rate, which is a set rate. Now, these rates do change periodically, and they do vary from city and county. And you can actually find these rates at the website that I have listed here, www.gsa.gov, or your CPA can help you with those rates as well. Generally speaking, using a per diem rate will yield you the best benefit. But again, you talk to your CPA, tell them your specific situation, and let them help decide, okay, is it better for you to take those actual expenses, or is it better to take per diem rates?
You're not locked into that. You can choose per diem rate versus expenses based on where you're at. Why don't you choose one for the whole year?
Can you choose it for the whole year? I believe you have to lock it in for at least the 1 year, but that's a good question, and we can find that out for you. Do you know?
I do believe it's the whole year. It's one or the other. You can't pick and choose based on the location.
But you don't have to, okay, but you don't have to decide that until you do your taxes.
Correct.
Right.
Keep track of both and pick one.
Oh, you could do that too. If you want to do both, that's more bookkeeping though, guys.
Well, you might, if you do the extra work, you might get an extra benefit at the end of the year by doing that. So.
Yep. Okay, so you have all this documentation, you have all these receipts. How the heck are you going to keep track of all this, right? Well, you can use an Excel spreadsheet, buy a software package like QuickBooks or Quicken, Peachtree. They're fairly reasonable, a couple $100 at Target or Walmart. You could hire a bookkeeper. Froehling Anderson has bookkeepers on staff that help our clients all the time with their day-to-day bookkeeping. One of your fellow anglers uses his mother-in-law. That might not be a good option for everybody, but it works for him, right? Also, you can just keep a journal. Last year at the conference, one of the professional anglers had spoke to the fact that he journaled everything, every time he went fishing. So where he went, what the water was like, what the weather was like, the time of day he went fishing, the fish he caught, all of these fishing stats. Well, that's exactly what I'm talking about with your accounting. You need to keep accounting stats. And so Froehling Anderson designed a 2016 fishing and expense log with the professional angler in mind. The first part of the book gives you a sheet where you can log your fishing stats, where you were fishing, what the water was like, structure types, what the weather was like, water clarity. On the back of that sheet, here's where you can log all your fish. The size, the time, the bait, all that information. Towards the back of the book, you can start logging your accounting stats. It's got a tab for repairs, meals and lodging, tournaments. Here's the example of the one: guide trips, tournaments, events, and shows. So you can have the date, the tournament, where it was placed, entrance fee, your miles, all that information that I was just talking about. You can log in this book. We're handing this out at our booth, so make sure you swing by the booth, see Diana and Jody, and pick up your copy. So in summary, all of this documentation not only will support the deductions that you want to take on your tax return, but it's also going to defend the fact that you actually have a business, not just a hobby.
So I can't come to a fishing conference and not show my pride and joy. This is my 30-inch walleye that I caught up in Canada at Eagle Lake Lodge, which we're giving away a free trip, so go by our booth and sign up. But so with this fish, I only won $300 for our fish bets for the week, right? But if you caught a fish like that in one of your tournaments, you probably did pretty good, I imagine. So maybe first spot.
How much would you win with a fish like this?
Well, you need 5.
Oh, you need
Oh,
5.
you knew.
Yeah.
You need 5 of them.
Okay, well, if you caught 5 of those, you do pretty good, right? Well, with that, that's fine. Well, okay. So,
That's okay. That's all right.
so if you caught 5 of those fish, you probably did pretty good, right? And just like Gail's son, you probably took first place. And with that comes tax planning. So the reason we do tax planning is so you don't have any surprises on April 15th. You don't want to forget about the tournament that you won last May. And you give all your stuff to your CPA on April 1st, hopefully sooner, not that late. But he tallies everything up and then he gives you your tax return, and all of a sudden you owe a large sum of money because you did forget that tournament. So that's the reason we do tax planning. You want to be proactive versus reactive. If you know that you won that tournament and you can set money aside so you have the money to pay for those taxes come April 15th. And a lot of that comes with what Gail mentioned on earlier is the good bookkeeping. If you keep track of your records throughout the year, you know where you are at any given point. So you have that ability to plan. So, and with tax planning comes quarterly estimated tax payments. Now, when you're a business owner, your taxes aren't just due on April 15th. Now, if you're a standard employee, you have regular withholding on your paycheck every 2 weeks. That's pretty common for everybody. But when you're an angler and you're winning tournaments, you don't have that withholding, most likely. So the IRS requires you to pay those estimated tax payments on a regular basis. Just like if you were an employee, you're paying every 2 weeks, but as a business owner, you're paying quarterly. So, and if you don't make payments, it can lead to unnecessary penalties and interest, and at that point, it's just wasted money. So,
At what point do you need to do quarterly?
at what point? Well, you have to look at it throughout the year. So, if the IRS is going to look at it, if you're earning income, so if you earn a lot of your income in the beginning of the year, the IRS is going to want you to pay that tax on a regular basis throughout the year. Now, if it's weighted differently, say you don't earn your income till the end of the year, you can adjust your payments throughout the year and beef them up at the end of the year to pay that tax. It follows the cash flow.
Okay.
So if you're earning money earlier, you pay your taxes earlier.
Well, what amount do they consider, at what point, is the amount necessary enough to do quarterly?
Well, they look at it two ways.
So let's say I net out after expenses, I have about $1,000 profit for the first quarter. So maybe I probably want to do quarterly.
You know, that's probably not. Probably not. That's small enough where you could probably get by with it. Now, could they charge you a little bit of penalties and interest? Yeah. But if you get into the $10,000 range, you know, in that first quarter and you skip your payment, you know, then you're going to get into the maybe $500 to $1,000 of penalties towards the end of the year.
Well, and if you have a spouse that's making 6 figures and paying in, some of that might cover that too.
Yeah. So if you're planning throughout the year, you know, talk to your CPA, kind of look at it, and they can kind of give you enough guidance to get you on the right track. So another thing that's out there for a lot of you is self-employment contributions. Now, a lot of you have the self-employment income off your earnings. So with that, you can take a certain percentage of that and contribute it to a SEP plan, much like a 401k. Now, it's due on April 15th, or your extended due date of your return, whatever's comes sooner. And if you're doing good tax planning through this, you can know what your potential contribution is going to be come April 15th, and you can set that money aside, just like you're setting aside money for taxes early in the year. Something else that just came into play, well, it's been around for a while, but Congress just renewed this 2 weeks ago, is accelerated depreciation. So with tax planning, you can talk to your CPA and figure out when is a good time for me to buy a new boat. Should I do it December 31st or towards the end of the year so I can get additional write-off? And basically we have Section 179, which allows for 100% write-off on new and used equipment in the year. And then we have bonus depreciation, which is a 50% write-off of the equivalent asset only on new equipment in a year. So with tax planning, you can kind of project that out and see, do I want to take all my depreciation now on those fixed assets, or do I want to push them out over the next 5 years? So it's a lot of room, and you can manipulate it and play with it to figure out what's the best benefit for you. One thing I want you to keep in mind is if you're using your boats for personal use, that's going to limit the amount of deduction that you could have. So say 10% of the time you take your wife and daughter, your son skiing on a ski trip, something like that. So you basically would be disallowed 10% of that depreciation expense that you would normally be allowed if it was just 100% business use asset. So something to keep in mind. And the last thing I'm going to touch on is just communicate with your CPA. Ask questions. Tell them what's going on in your personal life. Tell them what's going on in your business. The more the conversations that we have with you, the better understanding we're going to have for your business, and it allows us to, find loopholes for you, better deductions for you. That's what you want to hear, right? More often than not, when I have just lunch conversations with my clients is when I have, the aha moments for them. So, be in touch with them.
What's the definition of personal use?
Well,
Do we help define
Yeah, just like in your logbook, you keep track of that. You know, and it could be however you want to do it. It could be days, it could be hours used. You know, think of it that way.
You know, if you take your wife or daughter out or whatever fishing, if it's pre-fishing tournament, or pre-fishing for a video shoot or something.
Yep.
Then that's business. So
Yep, that's business. But you know, if you're taking them out and you're at your cabin and you put your boat in the water, that's going to be personal use. So that's going to, you know, limit how much deduction you can take. So, and one thing to keep in mind is, you know, the right answer for one angler might not be the right answer for another. A lot of you, you know, you have other things going on, so you have to keep in that mind. If you're talking to one guy, he's like, I was able to do this, this, and this, and then you go back to your CPA and your CPA goes, you can't do that. It's because you have different situations going on, so just keep in mind. And the last thing we're going to touch on today is multi-state tax filing requirements. So I work with a lot of NFL guys, and you know, it's playoff weekend, so I felt like this is a good example. So average NFL player plays in 20 games, you know, a year, 16 regular season, 4 preseason. 10 of those games are home, and 10 of them are away. So that NFL player, because he's gone into 10 away games, he's going to file 11 state tax returns in a given year. So now this is easy for him because his income's reported on a W-2. On a W-2, it tells you exactly what state you played in and how much income you earned, what state you played in, and how much tax was withheld on those earnings. Now you flip it over to a professional angler, all of your income is reported on a 1099. So you don't have that reporting document that tells you these are the states that I need to file in. But basically, if you're walking into a state and you're participating in a state in a tournament to fish, you're going to have a tax filing requirement.